We're analyzing BHP Group, stock ticker BHP, to see if this high dividend yielding stock is on sale. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for BHP. Then we're giving a final rating to the business. BHP was a Select 6 stock the last time we looked at the business. Is that still the case? There will be a key bonus metric along the way that just might be the tipping point when analyzing BHP Group for your stock portfolio. Before we get into these valuable metrics, let's understand BHP's stock performance. Right now, BHP trades for $63.17 per share. Year to date, their stock price is up 3%. Right now, they pay a huge 8.34% dividend yield. That would be in addition to these returns. In the last 5 years, their stock price is up 5% compounded annually, up 29% overall. In the last 10 years, their stock price is about flat. They're down just 2%. Going back to the global financial crisis, in the last 18 years, BHP's stock price has compounded at 4.5% annually. Keep in mind their average dividend yield is in addition to these returns. BHP trades $8 below their 52-week high. The company's up $20 from their 52-week low. They're an Australian-based business that's huge. They have a $160 billion market cap. But the burning question is, why should we be paying close attention to BHP? BHP is a global diversified miner, mainly supplying iron ore, copper, and metallurgical coal. The merger of BHP Limited and Billiton PLC created the present-day BHP Group. The dual-listed structure from the 2001 BHP Billiton merger was collapsed in 2022. Major assets include Pilbara iron ore, Queensland coking coal, and Escondida copper. Onshore U.S. oil and gas assets were sold in 2018, and the remaining petroleum assets were spun off and merged with Woodside in 2022, with BHP vesting the Woodside shares it received to BHP shareholders. BHP is growing its nickel business to supply more battery-grade nickel, and is also entering the potash market through the development of its Jansen mine in Canada. BHP traces its roots all the way back to 1851. With this background about the business, it's time to get into the numbers. Metric number 1, we want their average return on capital in the last 5 years to be above 14%. A typical business earns about 7% returns on capital. Looking for a benchmark that's double this potentially allows us to build in margin of safety based off the quality of the business. BHP's returns on capital have increased by a lot over this time. As a miner, their returns will depend on commodity pricing. Broadly, commodities have increased in an inflationary environment. BHP earned 47% returns on capital last year. In a given year, BHP earns 27% average returns on capital. That's nearly 4 times better than a typical business. This is a big check on metric number 1. Metric number 2, we want to see growth to go along with these high returns on capital. We're looking for 5-year revenue, net income, and free cash flow growth. All of these have to be up for this to be a check. This is all or nothing. We're including their numbers up until today in our calculations here. During this time, BHP has grown their revenues by 40%. Their earnings look like they're up huge. That's coming off of a low base in 2018 and an artificial high due to their spinoff. Their earnings are up huge. BHP's free cash flows have also grown by 54%. All 3 of these are up. This is a check on metric number 2. Metric number 3, we're looking for earnings per share growth in the last 5 years. This looks at BHP from the view of an individual shareholder in the business. We just learned their earnings are up huge over this time. Additionally, BHP has bought back 5% of their shares, so these small buybacks are adding on to their per share growth. Even when we exclude extra items from their earnings, they've still grown on a per share basis. This is another check on metric number 3. Metric number 4, we're looking for free cash flow per share growth in the last 5 years. A similar story here with their free cash flow growth and their small share buybacks. This has led to free cash flow per share growth. Their free cash flows per share have nearly doubled during this time. This is a check on metric number 4. Recapping where we stand currently, through 4 metrics, we're perfect on BHP. But what's the vital piece missing? You might think nailing returns on capital and having good growth is the key, but we haven't touched on the one thing that I believe truly sets BHP apart, which is having these characteristics without using a lot of debt. Metric number 5, we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow they produced in their last 5 years. BHP ended their last fiscal year with just $700 million in net debt. That was super small compared to their free cash flows. They've added on some debt during this time. Right now they have $7 billion in net debt. In the last 5 years, BHP's produced over $80 billion worth of free cash flow when we add that up. up, that's nearly half of their current enterprise value. These have been huge free cash flows for the business, easily supporting their debt loads. This is a huge check on metric number 5. Before we get into the first of 2 different ways we'll estimate a value for BHP, it's time for our bonus. As our bonus, we're looking at BHP's dividend profile. Right now, BHP pays a huge 8.34% dividend yield. Is it supported? People make mistakes all the time by blindly chasing dividends. For BHP, we want their dividend to be covered by their free cash flows. That's been the case in all 5 of these years. The company paid a special dividend in 2019 that was not fully covered by their cash flows that year. Their regular dividends have been covered in all 5 of these years. Since 2020, their dividends have pretty much been pegged to their free cash flows. Keep in mind, as a commodity business, if their free cash flows were to decline, their dividend payouts likely would decline as well. This is a snapshot of their last 5 years of performance and is no guarantee for the future. BHP's dividends have been supported throughout this time and seem to be pegged to their free cash flows. The big metric of them all, metric number 6, we want BHP's average 5-year free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we're estimating a value for BHP. Right now, BHP has a $172.5 billion enterprise value. They're a big company. This number accounts for both their market cap and their net debt position. We learned BHP produced $80 billion of free cash flow in their last 5 fiscal years, meaning they produced $16 billion in an average year. When that's divided by their enterprise value, we get a 9.2% average free cash flow to enterprise value yield. On a current basis, in their last 12 months, BHP produced $19.4 billion of free cash flow. When that's divided by their $172.5 billion enterprise value, that gives us an 11% current free cash flow to enterprise value yield. Both of these are coming in nearly 3 times the yield of the 10-year treasury. They're almost double that risk premium we'd be seeking, meaning BHP has done it. They're a perfect 6 for 6 on our Select 6 analysis again. But don't just run out and go buy the business. BHP has benefited from higher commodity pricing. Mining companies are cyclical. They're prone to boom and bust cycles. We also need to figure out a more concrete estimate of their fair value per share. Everything we've discussed so far is important, but there's something missing that, in my opinion, is the main reason to analyze BHP, which takes us on to using a discounted cash flow model to come to an estimate of their fair value per share. A DCF model is based off the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. We're starting with an average of BHP's 3 most recent fiscal years of free cash flow, then using historical assumptions to grow these into the future. It's up to you to figure out if these assumptions are accurate or not. If we add in the company's tangible book value, which gives an estimate of their net worth, if we're seeking a 15% rate of return, which is the rate of return Warren Buffett's looking for, in addition to his margin of safety requirements. Based off these assumptions, at today's valuation, it looks like an estimate of BHP's fair value per share is around $77. There are some key points to keep in mind. BHP is a cyclical commodity producing business. They've had a low degree of business predictability in their past. That could be the case in the future as well. These assumptions are based off 3 pretty good years for commodity businesses. Commodity businesses often look the cheapest on these valuation metrics at the top of commodity cycles. Please be aware of that. You need to have some insight into both supply and demand for these commodities and figure out what the break-even prices are for BHP to understand if they have competitive advantages or not. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a minute, we'll talk about our final rating for BHP, but we have to address something first. We've covered the numbers, but the qualitative aspects of this business are just as important. What are they? Starting with the qualitative factors supporting a potential long thesis. Number 1, BHP's iron ore assets are industry leading. The company remains well placed to continue low cost production and increase output with minimal expenditure and an efficiency focus. Number 2, BHP's Jansen Potash project gives it additional diversification, with potash being less correlated to the other commodities it produces. Number 3, BHP is a beneficiary of continued global economic growth and demand for the commodities it produces. We'd be remiss if we didn't cover the negative aspects of the business as well, looking at the factors supporting a potential short thesis. Number 1, resource companies could face growing sovereign risk as governments under fiscal pressure look to plug budgetary holes by taxing the industry. Number 2, with its earnings dominated by iron ore and copper, structurally lower demand from China could lead to significantly lower earnings. Number 3, BHP has shown improved capital allocation since its missteps during the China boom, but continuing high commodity prices could encourage it to once again aggressively expand output. There you have it for a balanced perspective of some of the qualitative factors of the business. Now it's time to give our rating. In analyzing BHP Group, the combination of BHP and Billiton, stock ticker BHP, the company once again is a select 6 stock. They look pretty great on our analysis. They have high returns on capital, strong growth, share buybacks, lots of free cash flow compared to their debt, and the company's free cash flow to enterprise value yields look potentially attractive. BHP has grown a dividend that's been pegged to its free cash flows, and that's been supported in all 5 of the last years. Keep in mind, however, this has been a pretty good time for commodity producers, and because of the cyclical nature of this business, there could potentially be dangers lurking beneath the surface. It's worth reiterating this analysis is not financial advice. When we performed our discounted cash flow analysis, from today's valuations using those assumptions, if you want a 15% rate of return, it looks like an estimate of BHP Group's fair value is around $77 per share. That's well above their current stock price, but these returns would be outpacing how the business has performed historically. Looking at all the factors of our analysis, BHP looks like an exceptional candidate for further research. This is not a buy or sell recommendation of any security. Consult with a financial advisor before making any investment decision. If you enjoyed today's video, be sure to like the video, subscribe to the channel for more stock analysis videos, share your thoughts about BHP Group, and let me know what business you want me to look at next time in the comments below. Thanks for learning more about BHP with me, and have a great day.